who benefited during this last period was value. And here we are saying, well, no. I look at energy prices, for example. The energy price after Russia invaded peaked at $130, the oil price, below the 147 in 2008, which was the secular peak. And it has not been able to get back there again. It's at $75, $80. And we've been saying that we believe the demand for oil, and this is one of the, if you did not own oil last year as a value investor, oil I think was up 60%, the sector, reaching for all-time highs as the oil price was coming down. Very unusual circumstance. So in February of 21, we could do no wrong. And I prepared the team. I said, this is not the real world. There is going to be another side. Don't take yourselves too seriously or any of this too seriously. Take our investing and our research seriously, but do not take the praise out there to heart and assume that we're brilliant and we can do no wrong. And so they were prepared for the first installment, but for to this last year to be down as much, even more, was a very interesting time for us. And much like in the crypto world, what gave us the courage of our conviction and basically shielded us from the critics in some way was our research and the breakthroughs that were happening faster, not slower, faster. When times are tough, innovation actually gains more traction, faster, better, cheaper, more creative, more productive. And so that's the irony here. We saw the traction that innovation was getting as the prices were coming down. And so what was happening was, and of course we have a 5-year investment time horizon. Our valuations on our 5-year forecasts crashed. And what I began to say in the media, I'd say as well, I consider what we're doing now, if you give us a 5-year investment time horizon, we have a deep value strategy. And of course, this drives the value, guys. And if we're right on both electric and autonomous, oil demand, which is about 100 million barrels per day now, and has been, we actually think it's been peaking for the last few years. It got hit during COVID, isn't quite back to where it was. We think we're in the peaking process, secular peak in demand. And we think that by 2020, this would be 2030, that oil demand will be down 30 million barrels. Now, wow. Oil demand, except for recessions, has gone down a little bit during recessions, but has been in a secular uptrend for 70, 80, 90 years. I'll set this up by saying that we think the oil price is going to be extremely volatile. And the reason is, we've seen some of this already, combination of ESG and environmental concerns generally. Oil companies pulled back on investing, which is one reason the oil price did get back to 130. Now, this will also drive the value investors. I apologize if some of you are here. Crazy, but if you look back at whale oil, remember that was our primary source of energy, light, in the day. What you saw when it was clear with the oil discovery breakthroughs that oil was going to displace whale oil, what you saw was a massive increase in volatility because companies basically said, all right, game over. I'm not investing in this anymore. And until the transition was complete, there was still a dependence, of course, on whale oil. We think the same thing is going to be true here. Now, all commodities are priced at the margin. And so the expectation out there right now in terms of what actually is being produced is that oil, the price is going to continue to move up over time. And demand is going to move up. Oil price will come back. If we're right, I just mentioned the oil price will be very volatile. The valuations of these stocks will continue to come down. That's how you will see it reflected in the market. And in terms of the ramifications generally, this is going to be a massive tax cut for the consumer and businesses, excepting energy business, which is hugely positive for the world. It is also going to, from a geopolitical point of view, it's going, the Middle East still has a lot of economic and political power because of its oil position. That is going to change. And so what we have to worry about is as energy prices, oil prices come down, how will they try and change the subject? We're watching what Saudi Arabia and UAE are doing. They're both shifting. They understand. They may not agree completely with our thesis, but they know they have to diversify. So they're both diversifying into innovation, actually. UAE probably more methodically, I would say, than Saudi Arabia. It's interesting, yesterday, there was an article in the Wall Street Journal about the UAE not leaving OPEC. And I'm saying, oh, man, this is really interesting. Whenever Saudi Arabia and the UAE disagree, the oil price is on the threshold of collapsing.
Why is that?
Because Saudi Arabia has the highest reserves of oil. And it is in Saudi Arabia's interest to control the price. Don't let it go too high because you want the demand to be sustained. Don't let it go too low because you can't fund your finances. UAE, some parts of the UAE are hardly dependent on Dubai, for example, is only 5% dependent on oil. So they don't have exactly the same incentives. In fact, their incentives probably are to increase production now to maximize, if we're right on what's happening here, and I think they believe we're right, then it is in their interest, if they can, to maximize their oil production now, if Saudi Arabia is going to be the offset. So I've seen that happen a few times, and each time there's been a rift, the oil prices come down dramatically. Mm-hmm. So UAE came out and denied it. But hey, where there's smoke sometimes, or thou dost protest too much, we've been here. So we'll see what happens.